All right, let's roll. Okay. Good morning. Good morning. Welcome to the Daily Money Market, man. You are actually with me, Che Yusuf. It's Friday. It's another AI and tech show, AI and tech news. We just want to go through in terms of AI and technology and see what are actually, news that are happening and that are actually pushing the market, whether to upper direction or to in down direction. We don't know, but we've been seeing a lot of positivities. Market goes all the way up, tech instrument especially coming back all the way down as well. The biggest thing that shook the market, it was earnings. It was the week of the tech earnings. So we're gonna go through just to see what is actually going on in terms of the tech earnings and any other tech news as well. So the first one, it's Meta advertising growth. It's a proof that the Hector AI spending is already paying off. So on Wednesday, earnings call with the analytics CEO Mark Zuckerberg and the CFO of the many ways that the AI has helped the company business to grow. Meta advertising sales in the second quarter earnings increased to 22%, double the growth rate of the rival, which is Google. Mr. Mark Zuckerberg said AI is improving, recommendations and helping people finding the better content, and as well as making the advertising experience more effective. That's what Mr. Mark said. So the four investors who are actually skeptical about the Meta massive spending of artificial intelligence and whether it will pay off anytime soon, Mr. Mark Zuckerberg is arguing them to look to the present. After the company better than expected second quarter earnings reported on Wednesday, Mr. Mark Zuckerberg, financial chief Susani, says of all the ways that AI has helped the company grow faster than the competition in the digital advertising market, Meta core business. The ways that it's improving recommendations and helping people finding a better content, and as well as making the advertising experience more effective. I think there is a lot of upside there that we should look, that says Mr. Mark, in terms of the earnings. So pretty much we are seeing that Meta reported revenue growth of 22% from a year earlier, which were to 39.7 billion, with 98% of its sales coming from advertising primarily on Facebook and Instagram. Its growth rate was double that the Google Ads business, which saw a sales increase of 11% of 64.6 billion, which is alphabetical earnings. So this one we're talking about Meta, and that's how actually Meta reported, surpass everything that they were actually, estimated. All right, so let's look what other earnings and stories are coming up. So the next one we're looking at Microsoft. So we look on Meta and let's look in terms of Microsoft. We can see the headline there. Microsoft says OpenAI is now a competitor in AI and search industry. So we can see the CEO of OpenAI, Mr. Sam Altman, and again, Estelle Satya Nadella, the CEO of Microsoft. So the story says Microsoft's relationship with OpenAI has officially become more complicated. On Tuesday, Microsoft added the artificial intelligence setup to the list of the competitors in the company's roster that for years has included a mega cap of Amazon, Apple, and Google and Meta. Microsoft has long-term partnership with OpenAI, serving as its exclusive cloud provider and using its AI model in products for commercial clients and consumer. Microsoft is the biggest investor in OpenAI, have poured reportedly 13 billion into the company, but the new casting indicates that they are moving into another one of another tough in the field filing. Microsoft identify OpenAI, the creator of the ChatGPT chatbot, as a competitor in AI offering and in a search and news advertising. Last week, OpenAI announced a prototype of a search engine called Search GPT. Some companies choose to pay OpenAI for access to its model. Others go through Microsoft Azure OpenAI service for those seeking an alternative to the ChatGPT. A Microsoft Copilot chatbot is also available through the Bing each engine and in Windows operation system. So pretty much this story, and it's about the Microsoft and OpenAI. We talked about it last week that Microsoft have a stake on OpenAI, but OpenAI they refuse to give a board seat for Microsoft to sit in the board of OpenAI. Of course, for very different reasons, but obvious reason is that if they sit there, if it says already on an article they spend over $13 billion investing in OpenAI. Imagine if you give these guys to sit on your board of the company. Definitely, the decision making will be based also on their aspects of profitability of their money. So they didn't give them a seat, and you can see now these guys are continuing crushing Microsoft listing OpenAI as one of the biggest competitor in AI and tech industry. So that's what's cooking in terms of all right. Getting into a magnificent one, which is called Nvidia, right? It's one of the also part of the magnificent, and it's one of the biggest company that has been pushing in terms of the tech instrument to go all the way up. So pretty much Nvidia shares soared to 13% after Microsoft accused fears that AI build out is too faster. So the Nvidia shares close to up to 13% on Wednesday after remarks from the top customer Microsoft and the rival AMD. Right? Microsoft spent 19 billion on a capital expenditure during its fiscal quarter, fourth quarter, with about 60% on hand way. So what does Nvidia actually saying? Nvidia shares popped up to 13% on Wednesday. Microsoft CEO and the financial chief advisor say that the company plans to spend even more on Nvidia bases infrastructure next year. The Microsoft spent 19 billion on a capital expenditure during the fiscal fourth quarter, with about 60% on hardware. The tech giant also suggested it's seeing a return on investment from expensive GPU based on service. The company remarks on its earnings call easy investing worries that Nvidia elevated AI sales were tied to an arms race of among cloud providers that could be slowed down. Microsoft earnings reported may encourage most Nvidia investors, and the Microsoft caps came in much hotter than expected at 19 billion in a quarter. UBS also analyzes and see that wrote in a note on Wednesday, Nvidia has been the primary beneficiary of the AI boom. Its stock has doubled for so far in 2024 and up more than 500% since the ChatGPT released in November 2022. That's some kick ass there, 500% on 2024 since 2002. That's some crazy there. All right, the Morgan Stanley analytic named Nvidia a top pick and a note of the Wednesday, saying that the concern include competitive dynamics, export control, and supply chain concerns are likely to fade with time. Our perception is that market is taking a very half empty view of some of the hyperscale comments, where there is a clear desire on the part of the customer to continue to commit on resources to develop a multi-modal generative AI. Morgan Stanley Analytic also says the same thing. So that's about Nvidia. When you look at it, that's a story about Nvidia. All right. Lastly, I think we can look into the Federal Reserve, as long as NFP, as long as well, when they talk about the soft landing. So a day before yesterday, we saw the Bank of England actually dropping the interest rate to 25 basis points. Last month they didn't actually drop, so this month at least it's better. They drop it to 25 basis points, but again the story remaining the same, asking them that how are you going to continue with this rate of cutting the rates, moving to other month, right? And all of them, they are keep on saying they are data dependent. They are data dependent. They're depending on the data that comes, then they can be able to make a decision. We saw also Federal Chair from United States, Jeremy Powell, being testified on a House of, with the members of the Parliament, still continues saying that he's very confident of cutting the interest rate from September. We don't know how much he's going to cut, but a lot of analysts, they were saying at least it could be better if they start cutting it at July. So that at least by August to December they can cut maybe 3 times. But the stories we're expecting to, a lot of analysts, they're expecting the US interest rate to cut by 25 basis points on September, going all the way to November, maybe December as well, 25 basis points. They are waiting for data as well because of they want to see if they're going to have a soft landing. So when it comes to soft landing and hard landing, it's two different things. Soft landing, it's when all the report has been actually positive. So they are backing you that you can be able to cut now the interest rate because of consumer price index. It's actually surpassed the estimated people are purchasing. NFP, number of employment, they are actually surpassing estimation. That means people have employed. Jobless claims number that they're actually claiming the jobless, it's actually identical to the number of NFP. That means people are claiming the job and people are actually getting hired. So those are data analytic dependent, right? Depending on the data to make a decision in terms of fiscal policies of cutting the interest rate. So that's what we call the soft landing. That's what they're actually waiting to have a software landing. If they want to do the hard landing, it will be like European Central Bank, beginning of June, they cut 25 basis points, although the report was not backing them up. Although the CPI, Consumer Price Index, it was not backing up, it was not surpassing the estimation, but they made a clinical decision to say that we're going to continue cut. The disadvantage of that, because you don't know what another report is going to come. If it's still the report is going to come negative, while you have reduced the interest, it actually means you are not, as a government or as a reserve, you are not collecting enough money that can sustain the development of the region of the country. So that's a difficult part about hard landing when you are actually trying to make a decision based on hard landing. But when you are making a decision based on a soft landing, a little bit better because the data it's actually supporting you. But again, it does have the disadvantage because the data can change anytime. Anytime we can see the lower consumer price index, and then what will happen to the next interest rate? It will be cut following by that, or it will be keeping on a pause. But yeah, man, then there's NFP, non-farm payroll. I think it's one of the data that is being waited to see, so that we can have clearly confidence to say that they can now, US can now cut the interest rate. So thank you very much for watching the video. Thank you very much for being part of the tech and AI stories, and keep subscribing. My name is Che Yusuf. Thank you.